Good morning and welcome back to Morning Markets from Two Potential. Paul Durrance, Investment Director. Today we're going to be talking all things UK. We're going to be looking at corporate earnings and UK manufacturing data. Really important to look at corporate earnings because it gives you a good insight to overall corporate health and future expectations. And then on a manufacturing data front, get a sense of the strength of manufacturing, but looking at the underlying components, how our companies dealing with the higher level of prices and what's the extent of demand, as well as looking at the labour market. If we start by looking at corporate earnings, BP, they reported their first quarter results for this year. World energy stocks have been doing exceptionally well year to date. For the first 4 months of the year, they're up approximately 30%, benefiting from the surge in oil price that we've seen, gone from $75 a barrel to up to $105 a barrel today. That's a 40% increase. So looking at corporate earnings, analyst expectations were already high. BP delivered exceptional results. Net profits came in at 6.2 billion, way ahead of analyst expectations of 4.5 billion. So the share price yesterday pushed materially higher. But following the results, we saw BP announce a share buyback to buy back their own shares and benefit existing shareholders. They left their planned dividend schedule unchanged, but given the strength of their corporate earnings, you saw politicians yesterday come out and really push back on the government in order to do more, tax oil and gas more, to help really help the consumer in a time where they're feeling a squeeze on their incomes given the higher energy bills that they're having to pay. In terms of manufacturing data, what we saw was a slight pickup for the month of April after a fall in March. The fall in March was very much due to the Ukraine-Russia developments, but this month the survey was a bit more positive. Prices is still an issue, so inflationary prices in terms of input and output costs are still an issue, and that's impacting demand. We're seeing a little bit of softness in demand domestically and also internationally, more specifically from Europe. But what is a positive is the overall labour market. Manufacturing companies are needing more labour to help support productions and push down backlogs. In terms of global equity markets yesterday, a positive return after what we know has been a volatile period. We saw UK stocks lifted by oil and gas. We saw energy stocks in the US also helping to lift the US market into positive territory, up around 0.5%. And we also saw strong returns from European stocks benefiting from oil and gas, but also banks and travel and leisure. That's everything from us today. Please join us tomorrow where we'll be talking about the Federal Reserve policy meeting.
Subscribing to the Two Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.